But the story of local privately owned banks has not been the story of bank failure after bank failure. Indeed, indigenous banks have carved out a niche for themselves, not only by competing with the long-established banks for mainstream clients, but by diversifying their customer base to include Kenyans in the low-income class and informal or Juakali sectors. Equity Bank, established as the Equity Building Society in 1984, stands out as the indigenous bank that has greatly tapped into this market to attain phenomenal success. The bank is the market leader in terms of account holders and innovative products and services targeting Kenyans in the lower middle and low income classes. The bank and its Chief Executive Officer, Dr. James Mwangi, have won numerous local and international awards in recognition of their performance.
It is true the 80s and early 90s was characterized by massive failure of what was regarded as the indigenous financial system or banks. The biggest failure came to a great extent by mismanagement. As we said, the competencies, the skills were not very resident in the majority of the people. The conflict between ownership and management, particularly in governance, was also a major cause. And the reason why we succeeded was very strong governance structures from the onset. We separated ownership and management, and that helped us a lot. I myself came as a manager. I was not in the ownership structure. And that separation allowed us to really manage what we could say conflict and a greed that was eminent, that when people saw money, they assumed it was their money and not the depositor's money, and diversified their investment using insider borrowing. So we were able to avoid that curse. I remember when I joined Equity, we were number 66 out of 66. And seeing today that we are the number one bank in number of customers, profitability, market capitalization in the country, we have really grown.
Other examples of banks targeting lower income and special customers are Jamii Bora Bank and two fully fledged Islamic banks, First Community Bank and Gulf African Bank.
You know, the reason why we decided we wanted to be a bank, we were a microfinance institution and we had grown very big. Even though we started with 50 beggars and had not planned at all to grow big. We grow very big because the poor desperately need access to finance for their tiny, tiny businesses that nobody thinks of as a real business. And when the central bank was going to regulate microfinance institutions, I was the vice chair of AMFI, the Association of Microfinance Institutions, so I was very much involved in these negotiations. And we started saying that what they're asking us to do and to be is almost like being a bank, so why don't we become a bank? And we had also seen our members grow from extreme poverty, and some of them grew very fast, and they were now coming into big business. Now they were above what we could do in microfinance, and they would have to go to the bank. But the bank they went to then didn't know their history, didn't understand that somebody who had never finished even primary school could be doing such big things. But we understood because we had seen them grow. So we decided we must be a bank ourselves.